Hello everyone. Today is August 12th, 2024. It's Monday and welcome to Nvda Radar Talks. Nvidia's stock price fell slightly by 0.21% last Friday, with a trading volume of 290 million shares and a turnover rate of 1.23%, both of which were lower than the previous trading day. The stock price consolidated at $105, and bearish and bullish investors temporarily reached a relative balance in this price area. So trading activity was not high. On August 5th, the stock price began to rebound in the $90.60 area. The trading volume on that day increased, but the volume was not much higher than the average daily trading volume of the previous 4 trading days. So this also means that the stock price will face many obstacles on the road to rebound. The trading volume of the stock from August 6th to 9th was significantly reduced, but the stock price did not fall further, but consolidated in the $105 area. So is it expected to break through this area and stand at the $113 price level this week? Let's take a look at the 15-minute chart of the stock. We can see that on August 5th, due to the stock price plummeting, a large amount of capital entered the market to buy at the bottom, and the stock price was strongly pulled back to more than $100. It is worth mentioning that on August 7th, the stock price fell sharply by 5% again. The trading volume in the morning session was significantly enlarged, so some capital withdrew from the market at this position, but the optimistic thing is that the market digested these chips and pushed the stock price to rebound. Technically, it is normal for the stock price to encounter resistance between $103 and $106, because it has touched the trading volume concentration area on July 30th and August 2nd. So the stock price has consolidated at this position, but the trading volume on August 9th has decreased again, indicating that the resistance at this position is not very large, and the market has already digested these chips. Let's take a look at the capital flow data of this stock. On August 1st, the stock price fell sharply by 6.7%, and its net capital outflow exceeded $1.5 billion, which also marked the failure of the stock price rebound and fell to a lower level. After a day of silence, the market ushered in large capital flows again, but this time it was a net inflow of $1.4 billion. A lot of capital entered the market to buy at the bottom, right? That may be because the stock price was oversold at the time. In any case, this is a positive sign. It is worth mentioning that on August 7th, capital again outflowed $1.1 billion, which is consistent with the performance of the stock price, but the rebound of the stock price the next day proved that at least part of it was reverse entry capital. However, on August 8th and 9th, capital also flowed into the market at the level of $1 billion, even though the trading volume dropped a lot. This is indeed an interesting phenomenon. I think these are positive capital. Let's take a look at the market position distribution data of the stock. The data shows that the current position profit rate of the stock is 45.5%, which is caused by the plunge in the stock price in July. We can see that $90.40 is the current bottom position peak of the stock, but this is not due to the large accumulation caused by the plunge in the stock price on August 5th. That is only a small part. It is more from the position before June, so the stock price rebounded at this position. $106.20 is the current waist position peak of the stock, so the stock price consolidated at this position last week. The position peaks above $106 can be divided into $113 and $120. Although the price difference is not very large, the positions are relatively concentrated, which is consistent with the change in trading volume. Then the question is whether the stock price can reach these two prices next. I think $113 is possible this week. Let's take a look at the weekly chart of the stock. We can see that the total trading volume of the stock has increased significantly in the past 2 weeks. The lowest price of $90 created in the last week corresponds to the starting point of the new round of bull market in May this year, so it provides a strong support for the stock price. The stock price only fell 2.35% in the last week compared with the previous week, so the stock price is expected to rise further this week. But please note that the total trading volume of these 2 weeks is not much different. So the stock price rebound this week is destined to encounter great resistance, and the first challenge is $113. Let's go back to the daily chart of the stock. I am currently moderately bullish on the stock, because it is known that the resistance above the current price is very large, but the optimistic thing is that the stock price has not fallen further at $105, and while a large amount of capital has flowed out of the market, a large amount of capital has also flowed into the market. If the bulls are able to absorb these short-selling chips, the stock price will rise to $113. Okay, guys, this is my price prediction for Nvidia stock. Thank you for watching. If you like my analysis, please click the subscribe button and give a thumbs up. I will bring you more latest price predictions for popular stocks later. See you in the next video.